Welcome everyone to this Tuesday edition of Inside India. I'm Sri Jegarajah. Here are your headlines. The Indian market's looking to extend their longest winning streak of the year, despite heightened tensions with Pakistan. Japan's Sumitomo Mitsui Banking may be closer to acquiring a majority stake in Indian private lender Yes Bank after reports that the RBI has green-lighted the move. And Other Energy is set to debut on the Indian main boards today in one of the country's biggest listings this year, but demand for the two-wheeler EV maker's IPO has been rather muted. Welcome, everybody. Let's take a look let's start by taking a look at the Asian markets. And it is a story of broad positivity with the exception of the SET index in Thailand, the benchmark off just by a fractional 0.2%. We're thin on the ground in terms of traded volumes because Japan and South Korea are closed for public holidays. Markets are waiting for the Fed decision out later this week and more tariff news. US Treasury Secretary Scott Bessent telling CNBC talks are underway and there could be substantial progress, even with China.
I can say that I am highly confident that we have 18 important trading partners. We'll put China to the side. The 17 other partners, many of them have approached us with the very good trade proposals. President Trump is going to be involved in all of those. He will be the final decision maker. I think we could see substantial progress in the coming weeks. We'll see. That I think it's Stein's law, that which is not sustainable doesn't continue.
Indian markets join us in about 45 minutes' time. Here's what Gift Nifty futures are indicating. We are looking at 24,569, which does represent a lift of about 100 points, given where we left off yesterday for the benchmark at 24,461. Let's give you the dollar-rupee exchange rate, 84.3660. Tensions between India and Pakistan have been rising since the terrorist attack on tourists in Kashmir. Both sides have been increasing and testing their military capabilities in recent days. Pakistan conducting a second missile test in 3 days, while India is asking several states to conduct security drills, according to Reuters reports. United Nations is urging both countries to avoid a military confrontation.
It pains me to see relations reaching a boiling point. I understand the raw feelings following the awful terror attack in Pahalgam on 22 April. I once again strongly condemn that attack and extend my condolences to the families of the victims. Targeting civilians is unacceptable, and those responsible must be brought to justice through credible lawful means. It is also essential, especially at this critical hour, to avoid a military confrontation that could easily spin out of control. Now is the time for maximum restraint and stepping back from the brink. That has been my message in my ongoing outreach with both countries. Make no mistake, a military solution is no solution.
And India has been preparing civilians now. There were blackout drills and orders to strengthen civil defence. Let's bring in Parikshit Luthra now. Parikshit, give us more details on what has been happening and what's been mandated by New Delhi, and just how is this being received on the ground amongst Indians and amongst businesses?
You know, the business community and especially investors, the retail investors are asking what's going to be India's option next. All the signs coming in from that important meeting that happened in the Prime Minister's residence a few days ago, where he met the National Security Advisor, where he met the Defense Minister and 3 service chiefs. The message was that we are giving you operational independence to do whatever is needed in order to retaliate for the Pahalgam attack. So the indication is that possibly we're looking at a calibrated response from India on terror launch pads in Pakistan. Having said that, you cannot avoid the fact or cannot ignore the fact that there could be an escalation in case there is some sort of military response from India. So these military drills, these civil defense drills that you're seeing across the country, where NCC cadets, college students, people living in apartment complexes are going to be sensitized. There will be training in terms of evacuation, hiding in bunkers, air blackout training. All of this is being done to sensitize the public as much as possible and as part of contingency planning. So that is the best way to describe this at the moment. And there is going to be an important meeting about this today as well, with at least representatives of 240 districts.
Yes, and it's not inconceivable that we could see some short-term volatility in the financial markets. Parikshit, tell us what you know about what is happening across the border in Pakistan.
Well, we have been seeing regular ceasefire violations. In fact, as we speak, Pakistan has violated ceasefire for the 12th time at the line of control. They've used small arms to fire at Indian forces, and places where they feel they're able to dominate the Indian side, or they have an edge. So that's been happening quite regularly, and the Indian army has been warning them. We've seen the Pakistani army, the Pakistani forces test firing missiles. A second missile has been test fired. At the same time, they have also gone to the UNSC accusing India of aggression. They've also said that the suspension of the Indus Water Treaty is almost like an act of war, an act of aggression on the part of India. And they have been saying that Kashmir has to be brought back on the negotiating table. It is an international issue. So Pakistan also using its means to try and provoke India, try and isolate India diplomatically. So we're really looking at this standoff going on in many ways, economically, diplomatically, militarily as well. There was a Moody's report which came out saying that in case the tensions continue to simmer, it's going to weigh on the Pakistani economy, and it doesn't come at a good time. This is coming when IMF is set to review the Pakistan request for a bailout.
And the situation really does not look conducive, does it, Parikshit, to any sort of diplomatic off-ramp in the here and now. But we would hope that that is one of the options that is on the table. Thank you very much indeed for that, Parikshit. We appreciate it. Elsewhere in the market, shares of Ather Energy are set to debut in Mumbai. The grey markets are suggesting a muted start for the e-scooter maker. The $352 million IPO reached full subscriptions only in the last day of bidding. Ather is the third largest IPO of 2025 in India thus far after Hexaware and Dr. Agarwal, but it is the first major listing on the main board NSE this year. Ather Energy plans to use the IPO proceeds for funding its new factory in the western state of Maharashtra. Let's get more analysis on this and bring in Raja Lahiri, a partner and technology industry leader, Grant Thornton Bharat. Raja, thank you very much indeed for joining me. So the grey market pricing for Ather is reflecting a mere 2% premium over the 321 rupee issue price. Expectations are for a flat to negative listing. Is this broad-based lack of enthusiasm going to define the IPO market in India as long as the global market uncertainty persists?
Yeah, so I think in my view, considering the kind of environment today, I'm not very surprised in terms of the sentiment driving some of the initial impact on the market or the IPOs that are coming. But fundamentally, what I believe is if you look at the kind of growth of India, the number of companies that have lined up for IPOs, I think there is significant energy and appetite for investors to invest. You already seen $2.9 billion of IPOs in India. Globally, it was $29 billion. Last year was $21 billion in India, right? So if you look at the trends, there is a significant capital appetite waiting to be invested in India. Second, if you look at the sectors, look at healthcare, the amount of investments that are required in healthcare in India, life sciences, hospitals, look at EV, energy transition, tech. All of these are significantly private equity backed companies, which definitely are waiting on the wings to be listed. So I think timing wise, I definitely feel there is going to be cautious and sentiment impacting. But in the long run, medium to long run, I expect the IPO market to bounce back fairly strongly in 2025.
Does Arthur have a perception problem in terms of the industry it's in? It's in the electric two-wheeler segment, highly competitive, very capital intensive. We've seen how Ola Electric has underwhelmed post-listing. So was Arthur simply too aggressively priced, Raja, or is this a business and the sheer scale of the addressable market in India, that given time, it can turn to its advantage and in time be profitable on a sustainable basis?
Yeah, I mean, to be honest, I can't comment on the specifics of the company, but fundamentally, if you look at what are the 2-3 key trends driving, EV got to happen, right? In a country like India, with the kind of market, with the kind of climate impact that is going on, EV is the solution, number one. Second, from an investor standpoint, I think it's very clearly said, and it is clearly articulated, that profitable models are going to sustain. So clearly, market disruptors, it's a good story, but in the medium to long term, it's got to be profitable. And third, I would say that it's not just the EV equity story, which is important for India, but the ancillary industries, right? Because EV also needs the battery, it also needs the consumer demand, it also needs the kind of climate investors that are investing in this sector. So fundamentally, I think this is a sector is going to just boom in the years to come in India. And this is just a start, in my view.
Raja, we've seen the drawdown in Indian equity markets from the highs that started last September, didn't it? And despite that correction and despite all the global market volatility and now this other brick in the wall of worry for Indian markets, which is the Indo-Pak tensions, do you think confidence and optimism amongst private investors remains undiminished? And in terms of capital raising, how concerned are you that another funding winter may be on the horizon?
Yeah, I think that's a great point. I think fundamentally, I definitely think there is going to be an impact, a short-term impact, because as you rightly said, there is an impact on sentiment, because it's not just capital. Investors wait for sentiment, investors look for certainty, investors look for protection of the capital. So I think there is going to be some impact in the short term. But having said that, look at the long-term fundamentals, right? You have significant growth in India, number one. Second, if you just look at the overall trade geopolitical risks that are going on, India fundamentally, from an export perspective, is actually not significantly exposed. So there is a significant domestic demand that is already in India. And third is the wealth creation. There is a significant wealth creation of investors, and you would be amazed to understand, at least from our perspective, when we look at potential IPO companies in India, it's not just coming from the cities like the Bangalores, Mumbais, and the Delhis. It's coming from the tier 2, tier 3 towns of India. So there is an upsurge of companies in India and investor domestic capital who wants to participate in the growth story. So I think that's the way I see the trend. But as you rightly said, short term, I think it's going to be caution, and it's going to be pretty protection of capital that is going to be important for investors.
Raja, do you feel that amongst founders that there is too much of a fixation, obsession even, to list? And Sandeep Patel at QED Investors has written extensively about this and how 2025 ought to demand a different playbook. It should be about raising capital preemptively, building governance muscle, which is important given what happened with Byju's, and beginning to operate with the maturity of a public company. This is before even jumping into the public markets. Do you see it in the same way? Absolutely
see in the same way. In fact, I would always say that to list or not to list, that is an important question. It is not an obvious one that you got to list, because there are significant advantages also for not getting listed. Because once you get listed, of course, there is value creation, but there is significant importance of business, governance and liabilities that the company and the company's management have to face. So from our perspective, I would just say only one thing, which is business, business, business. And why I say that is because if your business fundamentals are strong, right, no matter if the market has an upswing, downswing, it will always carry through. And I call it the embedded value of any business. The embedded value of a business covered with values, which is around the governance, trust, and transparency, that leads to valuation and not the vice versa. So clearly business and values, it needs to be the cornerstone, and that's happening in the market, which in my view, that is a good trend, and that has to get more inculcated in the overall capital market story of India.
Stricter regulations from SEBI, how has that played a role in delaying listings? And in the long term, this is no bad thing, yes?
Absolutely, it's a good thing, because regulations, when it is stricter, it poses much more important responsibility to companies, advisors, the entire community, because SEBI's first focus is protection of investors. So that's a very, very good thing. I don't think it enables delay of listings. It enables the right companies to come to the exchanges for the investors. So I don't think it's a timing of delaying the process. In fact, SEBI is very, very quick today. But what it means that quality companies with the right checks and balances will come to the exchanges for investors to invest in.
Have you got a line, Raja, on LG and Samsung Electronics delaying their listing plans? It feels like India is on the cusp of something of an FDI boom or renaissance, given that it is very much seen as the China offset, given the tariff arbitrage, given Make in India, that campaign, and how it could really get a big lift from a US-India trade deal. What do you make about the signals that it sends to the broader markets if LG and Samsung Electronics are delaying their IPO plans in India?
Means again, I can't comment on the specifics in terms of the company, but fact of the matter is it's about timing, right? Because the market has impact around the pricing and the investor sentiment. So timing has an important part. So I really can't comment on the specifics. It's a company's decision. Yes. But fundamentally, if you look at the interest, the kind of IPOs, the DRHPs that have been filed with SEBI, the kind of interest, the draft red herring prospectus.
Right, 72 companies, I believe.
Around, that's right. So very clearly, you also see multinational companies coming and kind of offering to the public. So and I see that trend actually coming bigger and bigger. You had Hyundai, for example, with their listing last year, which was $3.3 billion. So I don't expect that to be a one-off. I expect unlisted large companies, multinational companies also going to the capital markets, because that raises value accretion for the shareholders as also for the Indian public to participate. So I think it's more of a timing issue. I don't see it as a fundamental from an IPO market issue.
So given the DRHP pipeline, Raja, does it feel like the IPO pipeline is going to start flowing again, and FY26 will be the period when the IPO drought is relieved?
Yeah, means fundamentally there are many companies, 100+ companies waiting in the wings, right? The question is the timing. But fundamentally, if you look at it, last year, India with $21.2 billion, 300+ listings was the highest in overall capital markets. US, actually, we are seeing a little bit of a slump. Asia clearly leading the surge. And in fact, in one of our analysis that we did 3 years back, we believe that India would be one of the top 3 destinations of listings worldwide. And keeping the data aside, the kind of clients that we talk to, the kind of interest that we are seeing companies with overseas tax structures interested to flip their structures to India and to list in the Indian capital markets. So there is a very significant interest of companies now coming to India, because what companies look for is certainty, investor interest, and a market which is ready to kind of give growth. And as you rightly said, I do believe that the current trade dynamics that are going through, India has a very, very significant role to play, and many companies in India can significantly benefit out of this trade and the rebalancing of the supply chain. So wait and watch for many Indian companies
Yes.
to come to the market, in my view.
Do we have to look beyond the big guys, though, Raja? And what about the small to medium issues coming to the market? Are they going to be relatively constrained because of tighter SEBI regulations? And again, another constraining factor here may or may not have been the corporate governance issues. You only have to look at Byju's, right? It's gone from hero to zero. Where do you stand there? And to what degree does corporate governance really need to take a step higher for these issues to gain some traction amongst investors in the public markets?
Absolutely right. Means governance in India has always been very strong. There are many, many examples of many groups who've been sustained in India for decades, for years, for centuries. So, and if you look at some of these successful companies, one of the key common success factor is around governance and trust. Because when you come to the public market, the single most currency that you really take to the market is trust. And absolutely, as you rightly said, there are accidents that have happened, and I think lessons needs to be learned. I think people are learning, entrepreneurs are learning, investors are learning. And I think Mr. Narayan Murthy said it many, many years back, and very well. He said, when in doubt, disclose, right? Which means that when you come to the public market, you got to create a governance of transparency, of financials, your decision making, and finally it's also about telling the things that did not go well. And I think that's what investors look out for, the transparency and the trust.
Yes.
And I believe that governance is going to play a very, very significant role. And the SME segment, which has also been certain issues around governance in certain pockets, I think they're getting corrected, and which is a good thing. Because end of the day, it's not just the brand of the company, it's brand India,
Yes.
which is critical over here.
That's critical, Raja, and it's a point that Sandeep Patel made in his piece in the Economic Times. Strongest companies need to behave like public companies even before they go public, setting internal financial targets, enforcing operational accountability and building governance frameworks, to your point, that inspire trust. Raja, thank you very much indeed for joining me. Raja Lahira there from Grant Thornton Bharat. We're back in 2 minutes. Let's bring you up to date with some developing stories. Pakistan's central bank reduced its key policy rate by 100 basis points to 11%. The central bank took a brief pause in March, but now resuming its cutting spree, bringing down rates from a record high of 22%. Ratings agency Moody's is warning that the standoff could set back the country's economic reforms. In the meantime, the Kremlin is saying Russian President Vladimir Putin could head to India this year. Putin accepted an invitation from Indian Prime Minister Narendra Modi after a call between the two leaders. They also reiterated India-Russia relations are not affected by external influence and continue to develop dynamically. And finally, actor Shah Rukh Khan made his debut at the Met Gala today. He's the first Indian male actor to attend the annual charitable event. Fans cheering the 59-year-old actor's appearance wearing a suit designed by Sabyasachi. This year's Met theme is super fine, tailoring black style. Indian markets are staging a bit of a return from the lows seen last month. What's behind the bounce back? We will discuss that with Feroz Aziz of Anand Rathi Wealth after this short break. We're about 15 minutes away from the market open in India. This is how we are shaping up. Let's pull up the board and show you what GIFT Nifty futures are indicating for the open. 24,564 on the nose, so that does represent a lift of about 100 points. Given where we left off yesterday for the benchmark at 24,461. So what might keep this market in check and sentiment in check are these developing and concerningly escalating Indo-Pak tensions. We continue to keep an eye out on what's going on both sides of the border. The dollar-rupee exchange rate at 84.28. Now, here's a new catchphrase for tech watchers: vibe coding. CNBC's Kate Rooney explains the meaning behind that term and how it's changing the AI jobs market in this report.
One of AI's emerging superpowers is writing software. We are hearing tech CEOs talk a lot more about this trend. The term is vibe coding. So it's become sort of mainstream in tech circles. It's basically a way to write code more casually and quickly. You put in a prompt to describe what you want to build and go by more of the feel or the vibe, hence the name vibe coding, instead of writing in one of these coding languages. Startups have been all over this trend. Here's what Y Combinator partner Tom Blomfield told me about how early stage companies are using it. Here's what he said about the companies he invests in.
I think the really interesting shift today is that I'm not sure how technical you need to be anymore. I mean, we had a quarter of the companies in the current batch say that AI basically wrote all of their code. And these are highly technical founders with top computer science degrees. They're just not writing code anymore. They're asking AI to do it for them.
Then there's vibe coding on a much larger scale with big tech. Just last week, Microsoft CEO said AI is writing about 30% of code. Amazon told me something similar. It's in the 30% range. Same thing from Visa. So it's not just big tech. And then finally, Meta CEO Mark Zuckerberg says half of code will be written with AI by next year. This coding boom has not been flowing through to the bottom line, at least in this earnings season. Analysts do expect these companies to get more productive, maybe roll out products even faster, but they're not holding their breath for huge jumps in margins, at least not yet. I am hearing some jitters about what this means for the future of tech jobs in Silicon Valley, though. Kate Rooney for CNBC Business News in San Francisco.
Thank you, Kate. Got to catch that vibe. Let's get back to the vibe in the Indian markets. We'll be watching shares of Yes Bank today after local media reports that the RBI has given its nod to Japan's Sumitomo Mitsui Banking to acquire a majority 51% stake in the Indian private lender. SMBC could become Yes Bank's single largest shareholder after the move. State Bank of India holds 24% stake in Yes Bank and has been looking for a new buyer. In the meantime, India has been racing to finalise a trade deal with the United States. The country is now reportedly proposing 0-for-0 tariffs on auto parts, pharma and steel imports from the US. Report says the no tariff charge will apply to a certain quantity of imports, beyond which there will still be levies. We spoke to Rahul Jain of Goldman Sachs yesterday on how a trade deal with the US could impact the banking sector in India.
The financial sector is a derivative of the macro. Exactly. So if the US-India potential trade deal brings more business to the country, then eventually it should benefit the financial sector to the extent that the macro benefits from it. But in our base case, we continue to believe that we should have a credit growth of about 10 to 12%. ROA is improving in the second half. NPL risk is by and large behind us. So long as this trade deal either supports or improves the fundamentals, banking sector would benefit.
Right, so there are a number of crosswinds that the Indian markets do have to contend with. Let's try to navigate the outlook and bring in Feroz Aziz, now Deputy CEO of Anand Rathi Wealth. Feroz, thank you very much indeed for joining me on Inside India. You heard from Rahul Jain from Goldman Sachs, who just upgraded the Indian banks. Let's start there. It's a bet on the economy remaining resilient, though credit growth, that may be a cause of concern. Do you like the banks?
Yes. Good morning, Sri. So I definitely like the banks from a perspective of its valuation. Of course, NIMs are going to be under pressure because globally we are one of the highest NIM banking sector. But having said which, there's about 27-28% weight of these banks in Nifty, and there's a lot of capital flow which is happening from the mid-cap and the broader markets into the Nifty. So point one, I think the credit growth has been a little slow, but I very, very strongly believe that's going to pick up. If you look at the GST numbers of April, 2.37 lakh crores, that's the highest ever. There's about 13.7% direct tax collection growth for the last financial year. That implies that there is underlying growth in the economy, and the credit offtake and the private investments is going to take a U-shaped recovery. That's my guess, and I think valuations are reasonable. They're almost 2 sigma below the mean and the median valuations for the last 10 years. And I think if you look at the results over the last few days, the results haven't been so good. There have been 8 banks which have already given results. There's just been about 2% growth, but I think that's going to change for this financial year.
Feroz, how much conviction do you have towards Yes Bank, given SMBC are moving towards taking greater control of Yes?
See, I think that bank has gone through its share of troubles, and I think the Yes Bank, if you look at how it survived the crisis because of the tier 2 capital in the form of perpetual bonds were written off for several bondholders. That's what gave it the cushion. They highlighted a point. RBI highlighted a point in the term sheet of the bondholders. Almost about $1 billion was written off by bondholders by showing a point of no viability clause, which is called the PONB clause. So I personally think that shock absorbent brought in a lot of stability. Of course, the bondholders ironically lost money, but I think I'm reasonably positive that the bank will do well, and I think it's out of the woods.
What do you think about Ather Energy and the IPO, Feroz? It comes to the market later on today. Would you advise clients to buy this issue, or would you advise them to take on more of a wait-and-see approach?
I'll say I would not be too qualified to comment on the specific IPO. I personally think that if you look at how IPOs have behaved in India, most of the shareholding of the free float, which goes in the form of IPO, gets churned out in the next 3-4 days. How much ever we say long-term holding, if someone were to buy a business during an IPO, if there's some money left on the table by the promoter. But if I look at the kind of turnover in terms of delivery turnover in the first 5 days of the last 100 IPOs, it implies that whatever free float goes into market changes hands 2-3 times in the first 5-7 days. So India has been looking at IPOs as a short-term strategy. I personally think IPOs should be a part of one's portfolio if you really fundamentally believe in that business, and if the promoter has left some money on the table, you have to buy and hold. So coming back, I'm not specifically allowed to comment on a specific stock, especially if it's an IPO.
Sure. Understood. And there are a number of dimensions in these markets for us. Let's not ignore what is happening in terms of the politics, the Indo-Pak tensions, which are escalating and which have been impacting sentiment and confidence, especially about just in the immediate aftermath of those devastating and terrible Pahalgam attacks. However, India has seen these type of episodes before. Is this a short-term volatility driver, or could this get worse?
I personally think it can't get worse because what happens is, and it's not just about the tension, it's about also that kind of news coming at what valuation levels. So 2-3 points I want to make on this topic. Point one, I think we've already given away almost 4 trillion rupees of money back to the FIIs in the pretext of higher valuation. So since the outflows are already behind us, the global crisis, especially the trade war or this tension, hasn't impacted the levels of the broader or the Nifty markets, unlike most people's expectation, because the news is strong, but it comes at a place where already the outflows have happened. So that's point one. Point two, if you analyze the 4-5 instances over the last 25 years where India and Pakistan have gone into a high tension space, of course, there have been knee-jerk reactions when something is broken out in the first 2-3 days. But if you look at the full tension period of about 40-45 days average, we've seen the worst one being the 2001 Parliament attack, which was about 6-7% drop in the full period. But in the rest of them, the average fall in the rest of the 4 instances was just 2%. So you're absolutely right. It just infuses short-term volatility. Anybody who owns the market for even one fiscal year would be able to ignore this tension over a period. That's what history says us. Of course, future could be dramatically different. Well,
Feroz, so do you think your core thesis of the domestic-led sectors, discretionary consumption, consumer durables, healthcare, cement, retail, hospitality, defence, of course, and the banks, that is going to hold up in this environment where there are blackout drills, we basically have a country that is almost preparing for the worst-case scenario in conflict with Pakistan?
I personally think, I don't think I would be so bullish on the domestic sector only because the capital flows have already happened. See, when the stock price moves, it depends on how many people have already built position with the same hypothesis. If the hypothesis is domestic is going to do well, there's been a lot of capital flow already in those stocks. So that news is behind us because people have acted on that news. So I think that's been overdone. I personally think there are some sectors which have fallen, and I would be a contrarian. I would say IT would do beautifully well from an Indian context because I think it's beaten down. That's point one. If you look at the IT index, the results seem to be showing up now.
Yes.
Of course, they've always undercommitted, over-delivered IT as a sector, especially large IT companies. So I'm saying from a 1 year to 2 year perspective, I think Nifty IT has the potential to beat Nifty by about 4-5% per annum.
That's interesting. Don't we have to be careful with IT services for us? Because it's been very, I'm glad you raised that, it's been very mixed in terms of the earnings season. So do we underweight or do we avoid those names that have direct exposure to the North American markets and the prospects for slower growth and a fall-off in enterprise demand?
No, I completely agree that accumulating IT at one shot wouldn't be a great idea. I'm completely with you. Like I was telling you, it's 1-2 year call, but accumulating it gradually is making more sense. I think what I'm positive about is IT companies. 94% of the Nifty IT has already declared results for the fourth quarter. The fourth quarter results are already behind us. So, but I think accumulating it gradually would make so much more sense, like you alluded to.
Feroz, if I can ask you a very quick last question, where does all this leave your end-year targets for the Nifty 50 and the Sensex?
So I personally think if you look at Nifty 50, I would say 28,000 for this financial year is something which is doable because 26,213 was the highest level last financial year on 26 September 2024. After that, there has been a lot of capital flow allocations. And I personally think if you look at the Nifty earnings for this financial year, we think that it can end up at 1154. And the next year's earning target is about 1,308 rupees for Nifty. If I look at 19.6 P, I'm still speaking about a negative 4% froth in terms of the valuation. So I personally think 28,000 on Nifty should be doable in this financial year, give or take 500-700 points.
28,000 by the end of the year. We'll hold you to that, Feroz. Thank you very much indeed, sir, for joining me. Feroz Aziz there from Anand Rathi Wealth. Right, we are counting down to the market open in Mumbai. We are back in 2 minutes. Welcome back. Indian markets are just joining the trading day, and this is what the Nifty 50 is doing. Let's call it flat at the open, 24,455. The dollar-rupee exchange rate at 84.28. Let's look at some of the movers in the Indian markets today. Checking on shares of Paytm's parent 197 Communications, the stock down by 0.8%. The payment services giant is expected to report a decline in quarterly revenue. However, some analysts expect Paytm's losses to narrow slightly in the fourth quarter. We're also watching shares of Mahindra and Mahindra. That stock is up, performing strongly by just under 2%. The Indian automaker said that its SUV sales are expected to grow by up to 19% in the current financial year, driven by strong interest in its combustion engines and new EV models. This comes after the company reported a 22% quarterly profit, missing estimates due to higher production costs. We're also watching shares of Tata Motors. Shareholders are virtually meeting today to vote on a demerger proposal. The automaker plans to separate its passenger vehicle and commercial vehicle businesses into two separate entities. The shares right now just, let's call it flat, at around 660 rupees. And shares of Yes Bank, we've been following this one quite closely. They're performing like this, up very strongly, up by 8% after local media reported that the RBI has given its nod to Japan's Sumitomo Mitsui Banking to acquire a majority 51% stake in the Indian private lender. Let's just take another look at that stock, up by 8%. Strong reaction by the market. Let's switch gears and talk about climate change and financing that transition. The Ecosperity Conference, an annual sustainability event hosted by Singapore investment company Temasek, is underway this week, and our very own JP Ong is leading the coverage of that event. JP, what do you have for us?
Oh, good morning, Sri. And we've been talking about the themes around sustainability and Ecosperity. And when you talk about sustainability in a global context, there are a number of lenses you can view this through. One is, are we hitting our goals? We talked about it a while ago, and based on global carbon emissions, it seems that we are getting further and further from hitting some of those net zero decarbonization targets. There's also the question about, do the technologies work? According to Rachel Kite, who's the UK Special Representative for Climate, actually, she does think that there's been room to actually prove that green energy and the green economy indeed works, and a lot of the technologies are becoming more adopted by countries like the United Kingdom and countries across developing Asia. The other way to view this also is through the framework of the energy trilemma, making sure that not only are we having sustainable solutions towards energy, but also that they are accessible by many people and are also affordable and secure, actually. So you have that trilemma balance that you have to answer. And it's very apparent in countries like India that are trying to maintain growth targets to make sure that that prosperity is indeed achievable for 1.3 billion people, and also that energy can be done and they can sustain these high growth levels at a sustainable clip, and really sustaining and financing the energy trilemma and answer and making sure that energy can meet the criteria of the energy trilemma is quite important. And that's something we want to talk to our next guest about. We are joined today by Woo Chung-um, who's the CEO for the Global Energy Alliance for People and Planet. They do have a number of projects and also looks at India and other projects in the world with regards to how we can actually finance a better and more sustainable future while making sure that the trilemma is indeed managed. Mr. Thank you so much for joining us today. Which I do want to start off with that framework, actually. And again, as we mentioned, nowhere else in the world, perhaps, can we see how important managing and attaining that energy trilemma framework. We don't see it as much, more importantly, in other places like India, for instance, where they're trying to sustain growth based on the projects of the world, of the Global Energy Alliance in India. What are you seeing with regards to why it's special and perhaps even more complicated to achieving some of those goals of the energy trilemma framework out in India, for instance?
So thank you very much for having me here. And the Asia is growing rapidly, including India. And India is one of the largest economies in Asia, and the demand for electricity will continue to grow. And we all know that what's worse than having a fossil fuel is having no electricity. So we have to make sure that the country is able to use a sustainable source of energy. And India is one where there is enough capacity in terms of the knowledge of the people there to be able to implement some of these renewable solutions. So what we do from the Global Energy Alliance is to introduce some of the solutions that's fit for purpose on the ground. So how do the people live in the rural areas in India where they're not having regular, reliable electricity when they need it? So the kind of solutions that we're trying to introduce are off-grid solar-enabled electricity when the farmers need, so that they can use the electricity to improve the lives of their farmers and their families. So, for example, before the renewable energy is available there, the farmers would spend, especially women and girls, spend all day fetching water to irrigate the farms there. But with the solar-powered electricity, they're able to electrify the irrigation system with a switch of just turning on the switch, which would enable the women and the girls to be relieved from the time poverty. So they can actually spend their day doing something productive like going to school, which would actually have a positive, virtuous impact in improving their lives for the better future.
Now, that's very interesting. Right. Now, correct me if I'm wrong. I believe that India has a goal to achieve 500 gigawatts of additional non-fossil energy capacity by 2030. Based on your work there at the moment, how far away do you think are they to hitting that goal by 2030? And what is the Global Energy Alliance perhaps doing to help them move further towards those goals, either through new solutions or new investments?
So those 2030 targets are anchored within their ambition to reach net zero by 2070, right? So India is a classic example where new technology can be deployed. So the first thing is that government regulation. There has to be an enabling environment regulatory framework for the investment can come into the country, which is very much the work that we are working on. But also with the reducing the renewable energy costs, that we can actually come up with the financing that's needed for the investments there. But for financing to come in, you need the bankable projects. So building the pipeline of projects to be funded, whether it's a public sector project or a private investment that is come in, is crucial to channel resources into the country for productive use into the renewable energy business. So building the capacity at the policy level and also building the pipeline of projects that are bankable are very, very important.
Now, when we talk about these big projects, and again, as you mentioned, you have to build the pipeline, you have to build the project flow actually before you can get the financing. A lot of this comes down to, well, how do we finance these things? And a lot has been talked about, especially in the developing country context, about just energy transition partnerships and frameworks. Now, there are concerns that this could actually get pulled back because we've seen people start to pull away from ESG initiatives. We hear about the United States perhaps not participating so much in terms of just energy transition partnerships. Is this a concern from a group like the Global Energy Alliance with regards to reduced interest in just energy transition partnerships and helping further some of the investment goals that you have?
No, so when you talk about just energy transition, the just part, making sure that there's social inclusion so that everybody can benefit from the transition from fossil fuel to the renewable energy. So the people who are actually active in the fossil fuel industry needs to be retrained and repurposed in terms of their skills so that they can participate and maximize the benefit from the renewable energy industry. So the training and capacity building of the people is very important. And in the past, in some instances, the just part was thought about it as a second thought. So the government and the authorities have to make sure that the just is done first. But in terms of having the continued journey towards renewable energy, people do realize that renewable energy sources will make the countries be more energy secure, because that you become less dependent on the fossil fuel imports. So that journey has to continue with that thought. And using different kind of solutions is quite important also. So in the case of India, the variability of renewable energy source is being addressed through the battery storage technology, right? So that's being deployed in a massive way through some pilots that we are doing with the Delhi, for example. Just today, actually, we are launching the first ever utility scale battery energy storage system in Delhi so that we can provide more electricity to the people without having to add more generation capacity. So those kind of innovation is very important. And getting those kind of projects through the system within the regulatory framework is very important.
So getting projects out there and making sure you can foster innovation might be key to actually making sure that we can hit those targets and make up for lost time. Woo Chung-om, who's the CEO for Global Energy Alliance People and Planet, thank you so much for joining us on the sidelines of EcoSparity here in CNBC, and we look forward to seeing what else in the pipeline in terms of projects and potential that the group actually wants to foster in countries like India and in other countries across developing Asia as well. More conversation on the sidelines, but for now, it's back to you guys, Sri. And the clock is ticking, but there are groups like the Global Energy Alliance that are trying to do their best to making sure we hit some of those goals.
And it's a great narrative, JP, how innovation is driving accessibility to the grid. Thank you for that. That's it for the show today. Tomorrow we will speak to the co-founder of Arthur Energy. That's set to debut in the markets later today, and also chats with the CEO of the National Stock Exchange of India. Don't miss those conversations. That's it for today's programme. Keep watching CNBC. Dan Murphy and Access Middle East is coming up next.